Are you still chasing down AR from this tax season? Are you struggling to move your practice to a monthly recurring revenue model? With Practice Ignition, you can easily manage your client engagement letters and collect ACH or credit card payments all in one place. Stay tuned to hear more from our sponsor, Practice Ignition, later in the episode.
I guess my question is, will the IRS finally end the Free File program and create their own Free File app? Will they create their own tax software for simple returns? I think it's unlikely that they'll create software that can handle complicated situations. But, will they take Free File in-house is, I guess, my question. Today is Monday, July 19th. This is the Cloud Accounting Podcast. I'm Blake Oliver.
And I'm David Leary. And Blake, if you reach out your right arm, I reach out my left arm, we can touch.
We're touching hands. We are here in person in New Orleans at Accounting Salon 2021, which, for our listeners that are not familiar with Accounting Salon, David, what is it in 10 seconds or less?
10 seconds. It is an invite-only conference for the most forward-thinking cloud accounting accountants and bookkeepers in our industry.
And it brings us together. We're here live. I don't know where to go with that.
Well, we've had a day of conference, so we're rusty. You're not used to going to conferences. You're not used to having a beer in a lobby and having breakfast with mimosas. It takes you a little bit to get back on the train of conferences, so we're just a little foggy. But we figured, why waste the opportunity? We should record face-to-face.
We are here at the end of day one of this conference, which is 2 days, 3 days, can't remember. What is top of mind for you this week, David, in the world of cloud accounting?
There's lots and lots of app news. I think one of the big things is kind of app news. Intuit pulled out, remember the TurboTax Free File, all that fiasco that's been going on?
Yep.
ProPublica articles. Intuit completely pulled out of that.
That's some big news. And that relates to the IRS. I have a bunch of other IRS or tax news. There's a new startup that is going to help fight tax evasion. I've never really seen anything like this in our space. It's the board of directors includes a former IRS commissioner and people high up at PwC. I guess they're going to sell this software to tax agencies around the world.
I'm so disappointed because I saw this and my first thought was, people are going for that $80 billion the IRS is going to give over the next decade.
Could be.
People are going to create services just to go win some of that money.
Yeah.
And I was like, why didn't Blake and I think of this?
A real estate accounting tech company, Proper, has raised money. So they're another one of those accounting firms with engineers. We've got updates from Xero and QuickBooks. There's Revolut, that neobank, just raised $800 million. Even Apple is working on fintech products with their Apple Pay. They're going to have a buy now, pay later. Lots of stuff going on this week. This episode of the Cloud Accounting Podcast is sponsored by AFO Wealth Management. AFO Wealth Management Forward was created to allow accounting firms to integrate wealth management services into their practice with ease. AFO Wealth Management Forward, powered by Arrowroot Family Office, provides a simple and easy way for accounting firms to integrate financial planning, estate planning, life insurance, and investment advisory into their current practice to increase recurring revenue streams, without straining existing staff and resources. The program provides access to a robust online learning management system, one-on-one coaching, monthly Q&A sessions, webinars, and access to great partners, including Betterment, Vanilla Estate Planning, commission-free life insurance from DPL, and financial planning tools like Right Capital and eMoney. Learn how to easily adopt wealth management services through the power of technology and collaboration, and get 25% off when you mention the Cloud Accounting Podcast. Head over to cloudaccountingpodcast.promo/AFO. That is cloudaccountingpodcast.promo/AFO. David, I'm sorry to say I have PPP news. So maybe we should just get that out of the way.
I thought we were done with that.
Not quite. So apparently banks are reversing course on PPP loans. For some business owners, it just gets worse and worse and worse. Not only did they have to wait a long time to get their loans, now banks are coming back and notifying folks that they shouldn't have received the amount they were approved for. So they're not going to get forgiveness for the full amount.
All right, so you got approved for $50,000. You took the loan for $50,000. They're coming back now, many months later, possibly, and saying, "Oh, by the way, Blake, you really only got approved for $34,000. You owe us $20,000."
And yeah, and so then you're going to have to pay back the rest as a loan, right? 1% interest, all that. So
that's a good game. Thanks, God.
I know, right? So it's not really clear here what is the issue. Like, why did the SBA come back and approve a lower amount for forgiveness than the bank originally gave out? I think this is probably miscommunication kind of situation. But if you're having that happen with clients, apparently this is not uncommon. There are multiple stories here in this article on theintercept.com about this situation.
Well, that tells me the PPP will still be in the news for the rest of
for
the
ages,
of this podcast.
Forever, for all time, always. All right, let's talk about app news. But actually, first, we got a voicemail. So let's go ahead and listen to that.
Hey, Blake and David. This is REA CPA PFS CGMA in SFCA. In recent podcasts, you've discussed how the expenses to prepare and register for the CPA exam sometimes present a financial barrier to entry that's insurmountable for some people. This prevents otherwise capable CPA candidates from pursuing licensure. This is not good. We need qualified people to become CPAs. I've recently come across a great resource. Anyone who's interested in pursuing CPA licensure should check out the website thisway2cpa.com, which is fueled by the AICPA. For CPA exam candidates, to mitigate the financial affordability hurdle, the AICPA Foundation offers scholarship reimbursements of up to $1,500 for CPA exam fees and prep courses. The deadline to apply for the CPA exam reimbursement is September the 15th, so exam candidates should get their application in soon. For students, in the education section, under the AICPA Legacy Scholarships menu, there are several other scholarship opportunities ranging between $3,000 and $10,000. Again, that website is thisway2cpa.com. We definitely need more CPAs in our profession, but we definitely should not lower the qualifications to get them. And yes, it definitely does pay off to get the CPA license early in your career. Thanks again for your great podcast. It's been one of the most powerful influences in my cloud journey. I'm indebted to you and welcome opportunities to help others. And keep up the great work in propelling cloud accounting forward.
Thank you, Ray, for those kind words and that tip. Thisway2cpa.com.
And it's not just a tip. I mean, it's a bunch of information. It's very, very good. Now we don't have to make it long as the show. It's a very long, and it didn't cut him off. I thought the voicemail had like a limit.
I think it's like 3 minutes.
Oh,
that was two.
Perfect. Perfect size voicemail then. Perfect.
Very well timed. Thank you, Ray. All right, shall we do app news? All right, so what's the deal? Intuit is leaving the Free File partnership.
They're leaving the Free File partnership that they kind of help spur and loosely create along with the IRS and the federal government. It's how many years is it now? Is it?
I think it's
15
over
15 to 18, somewhere in that.
Something
range.
like 20 years.
20 years.
This partnership has existed. So, what exactly is Free File? We've talked about it on the show. Maybe people have forgotten. Maybe they didn't listen to those episodes. Why? What is Free File?
So in an agreement, so all the software companies have made an agreement with the IRS, and the IRS basically agreed, hey, we won't build tax software if you let some percentage of the population use your software for free. And I think it's currently adjusted gross income of $72,000 or less.
I think that's right. And so for certain folks, that's what they were supposed to be able to get through Free File, get your taxes done for free. IRS agreed. We're not going to make our own software.
And remember, it was all messy. You had to go to a certain website, and that has a link to the TurboTax, and you could get to the other TurboTax. Next thing you know, you're paying for TurboTax, and you use the ProPublica, and it got really
that was the
exaggerated
scandal.
around. The scandal.
So the scandal, was it last year, the year before? It was before the pandemic. In the before times, ProPublica exposed Intuit's practices of allegedly hiding their Free File page by hiding it from search results.
The robot text file, they changed that. They also did just other questionable practices.
Right. But something that is not unusual for a large profit-driven corporation, you have folks in there who want to steer people, millions of people, into paid products. And they were prohibited from doing that inside of the Free File applications. So they had to steer them to something else before they ever got to Free File. So it's circumstantial evidence, but you could see it in the numbers in that only 3 million people or something per year would ever file with Free File.
But and of that, Intuit helped the most companies.
Right.
They always had the most free filers. They pretty much were the bulk of that program.
By far. So they were responsible for the bulk of free filing, but then the question is, well, shouldn't it have been more people? Because there's a lot of people in this country that qualify for it but never found it. And, to be fair, the IRS didn't do exactly the best job of promoting it either. It was not easy to find. So anyway, after that whole fallout, the expose, it was a big deal. Intuit's CEO had to issue like a statement internally. There was that got leaked. There was lots of political back and forth, and
a target. They get a target on their back
Yeah.
from politicians. It was very, the media was eating it up.
Yep. It made mainstream press. NBC was reporting on this. CNN, New York Times, Wall Street Journal, hit everything.
And based on what's in the blog post, they did not respond to anybody for further comment, any of the articles I read. But there's a quote from their blog post that really almost makes it seem like, you know what, forget it. We're just out. You guys deal with it. We're just not going to, it's too much outside pressure. So I'll just read this.
So this is the Intuit blog.
This is the Intuit blog site, yep.
About pulling out, okay.
With the Free File program surpassing its founding goals of e-file and free tax preparation, and due to the limitations of the Free File program and conflicting demands from those outside the program, we are not able to continue in the program and deliver overall the benefits that can help consumers make more money, save more, and invest for the future. So I think they've just decided it's better just to not even participate in the program and let it become what it becomes and just move on.
And the title of this blog post that Intuit used to announce this change it's a good title, so I just got to read this. It is Accelerating Technology Innovation to Better Help Consumers Solve Their Most Pressing Financial Problems.
I don't know why that's titled that.
It's almost like somebody in PR had to come up with a title and just like mashed a bunch of words together or something. So Intuit's argument is that the Free File program put limitations on them that ultimately were not as good for consumers because, and they list them out here. So they couldn't import data beyond the tax return. They could not deliver access to tax and finance experts for personalized support free of charge or at a portion of the cost elsewhere. I guess that's probably referring to the TurboTax Live type of features they've introduced into their paid products. Using AI models to proactively intervene with customers when they may be making a mistake or appear confused. Direct deposit refunds into free high-yield accounts so they can save more and invest to make their money work for them. And do refund advances. So those were things that they say they couldn't do under Free File that they'll be able to do, I guess, now that they're not part of Free File. Although I guess they were always able to do this, just not for the people who chose to use the Free File product.
But now they can kill Free File.
Right.
Like they can out-advertise Free File. So anybody now, it's free game. So if you're searching for Free File, now Intuit can't be accused of tricking you. they just will dominate. They'll just push everybody to a paid TurboTax product.
Because they can do ads. When people type in Free File, there's nothing stopping Intuit from
sending it to their own websites now. So nobody can accuse them of anything dirty. And now they can just, instead of doing 17 million free tax filings through their product and the Free File products, they'll just drive tons of people to paid. And maybe in hindsight, we might all look at this a year from now, ProPublica, and everybody be like, well, yeah, I guess it was better the other way when people actually got some free returns, because now the free market's going to decide this and competition's going to decide this. And if I had to bet, because the IRS is so bad at getting traffic to that Free File website, that it's just going to go away. I think even that other site was spun up with TurboTaxSucks.com. That was the TV show the guy did, right? The Netflix special. He spun up that site, and that site is just a link to a bunch of free files.
I guess my question is, will the IRS finally end the Free File program and create their own Free File app? Will they create their own tax software for simple returns? I think it's unlikely that they'll create software that can handle complicated situations, but will they take Free File in-house is, I guess, my question. And it's hard to see them doing it with the current situation. And maybe this is why Intuit chose this moment to pull out of the program, because the IRS is so backlogged, so behind on millions and millions and millions of returns. They've got their hands full just dealing with that. So how could they then go and create a competitor or create their own Free File? It's just not going to happen unless Congress gives them more money. But that's all still up in the air.
This episode of the Cloud Accounting Podcast is sponsored by Practice Ignition. Are you still chasing down AR from this tax season? Are you struggling to move your practice to a monthly recurring revenue model? With Practice Ignition, you can easily manage your client engagement letters and collect ACH or credit card payments all in one place. Streamline your sales process and upsell your services by allowing your clients to choose from up to 3 proposal options. Once they choose their desired proposal, the clients select their preferred pricing option, enter their payment details, and sign, all in one place. With Practice Ignition, you can set up automatic payments from your clients on any billing schedule imaginable. Monthly recurring, annual, quarterly, weekly, hourly, even variable unit-based billing for volume-based services. To learn more how Practice Ignition can help your firm eliminate accounts receivable, and for 50% off your first 3 months, head over to cloudaccountingpodcast.promo/PI. That is cloudaccountingpodcast.promo/PI. Practice Ignition, online payments designed for CPA firms. Yeah, so I mean, the IRS is pretty busy as it is, like you just said, but then they're also working, instead of building software, they are now starting to partner with a company, a startup that just got $13 million in funding to help tax evasion.
This is Ivix. They are a tech company that aims to help international tax authorities catch large-scale tax evasion. So they got $13 million in seed funding. According to Accounting Today, the company develops technology that automatically analyzes public data sources to identify tax evasion. And the board of directors is interesting. There's Fred Goldberg, a former tax commissioner. He was IRS chief counsel and an assistant Treasury secretary for tax policy. There's Don Fort, the former chief of the IRS's criminal investigation division. Eric Hilton, former commissioner of the IRS's small business self-employed division. And there's PwC executives advising the company. This is an Israeli company. I feel like a lot of these like analytics companies are Israeli. They seem to be doing a lot in that.
There's a lot of hot startups, and that's the hot spot here. What's interesting about this is I kind of, as you see the board of advisors, and there's that fine line of like there's the board of advisors, and there's like the advisors that actually know what they're doing. And it makes you wonder, like, do any of these people, are these just names that had great titles? And it's like, what was the Theranos, the blood drop girl?
Oh, Elizabeth Holmes,
right? Remember, like, who was the big Desert Storm war hero? The general.
Oh, that got suckered in?
Yeah, like her board was full of all these people with these great titles.
Who didn't know anything about
medicine. They didn't know
medicine.
anything about medicine, nor running a company or startup, et cetera. And so I wonder how much of this is like they're actual advisors, or are they just listed as board of advisors because this looks good to go get more funding?
We'll see, I suppose, right? Based on how well this company does. It's interesting. I mean, you said at the beginning of the show, maybe they're looking to grab some of this IRS money that Congress is going to potentially appropriate.
Because if the IRS has a mandate to get more money from tax evasion and tax avoidance and people paying their fair share, they're going to need some software that surfaces who they should go after. And they're not going to build it very clearly. We've discussed this. They're not going to build Free File. They're not going to build this. They're going to buy this.
Well, the IRS is building some of their own tech. They have released an online tool for managing child tax credit payments. I wasn't really paying attention to this because I don't qualify for the child tax credit payments. At least I don't think I do. But then I noticed last week a credit appeared in my bank account.
I got a credit as well.
You got one too? So now I'm going to have to go on to this portal and figure out why I got that, because I don't think I qualify. My theory is that they haven't like tied together my wife's W-2 and mine to like total up our income. Even so, we filed joint, right? So like I don't think we are under that threshold, or that ceiling. But if you're in the same situation now, you can use the new tool that debuted at the end of June, the Advanced Child Tax Credit Eligibility Assistant. It enables families to answer a series of questions to see whether they qualify for the advanced credit. And then you can use the Child Tax Credit Update portal to let families verify your eligibility for payments. And if you choose, you can unenroll. So I think I will be unenrolling just in case.
Well, it'll all get calculated out when you file your taxes, though, right?
Right, but I'm going to owe it back if I don't qualify for it, right? So I don't want to be in that situation. And this is just one of those things where not only is this advanced child tax credit making things more complicated for the IRS because they've got to manage all these payments, and they're sending millions and millions of them now. It also creates situations for taxpayers and their advisors, because now we've got to figure out, okay, do we opt out of this thing? Do we let it happen? Our clients are probably going to get the money and not even tell us, and then we have a situation where they don't get their refund and they're pissed off at us instead of the IRS.
Well, hopefully in your CRM of all your clients, you're keeping track, like, oh, they have kids, a little checkbox in your CRM, and then you look up those clients and you probably reach out and be like, hey, by the way, maybe you're going to get some money, maybe you should have the money, maybe if you're going to get money and you shouldn't have the money, and I can help you turn this on or off. Well, and this fire hose of free money that's just coming from the feds.
And that's what we should be doing, right, is emailing our clients and letting them know about these things and telling them to get in touch. But, unfortunately, I think there's a very few firms that do that in a systematic way. But it's a good opportunity. So if you haven't let your clients know about that, it's a good subject for your next email.
So I saw an article about barter. Because I always, back in the days when I worked in tech support, I always liked it when somebody was like, oh, I traded some goods and services with another small business for goods and services. And I always loved recording that into QuickBooks. Because you'd have to set up items, and they're set to an offset wash account, or you kind of created an account, like a bank account called barter, and it should always zero out. And it was just kind of always a fun little challenging phone call to take. And to see an article now about, bartering going from an underground into like a cash management strategy. That was the article headline here. Is on the payments.com website. And so there's a new startup called Barter Pay. So think like Better Pay, but Barter Pay. And what was confusing about it that I don't totally grasp the concept of, because essentially a lot of their play is you might have excess inventory, and you could barter that and trade that with somebody else. And you don't trade it for the actual goods. You trade it for barter credits, which are currently the same equivalent as a Canadian dollar.
Okay.
So isn't that just like selling your goods? like what's I don't understand the middleman here on this, because if you're able to get full value for your goods through this credit system, why not just get the full value as cash? Right. Unless the people buying those goods from you, they don't have cash yet either.
I don't know. Sometimes I think there are a lot of startups that are kind of looking. They've got a solution looking for a problem, I mean, like you said, David, you figured out how to do this with a bank account in QuickBooks. And so now they've created an app to do this. Well, it's a marketplace, but it's interesting.
Yeah, I don't know, I'm stuck staring at the website, just trying to understand, like, if you're going to convert your goods to some credits, well, there's got to be a way just to use the cash, like, because you're not trading with that person.
Yeah.
So how are your goods worth credits?
I don't
Unless
know.
somebody who has credits is getting them from you. It's strange to me. I don't know.
Well, in something that may be more familiar, Relay Financial, which enables business owners and accountants to open up bank accounts virtually in a very short amount of time. You could do it in a day. They have released Relay Pro, which is a integrated bill payment solution. And folks who have used Bill.com or another bill payment solution, this will be very familiar to you. So you can import bills from QuickBooks Online or Xero. There's a review, approval, and payment workflow from a single dashboard. You can do multi-step approval rules for bill payments, batch payments. You can then sync those bills. They will auto-sync back to your general ledger as paid. And the thing that's interesting here is that you're getting 50 same-day ACH transfers per month for free. So they've connected into the same-day ACH network that has been built out here in the U.S. now. So I think that's kind of a nifty feature to be able to pay same day.
Well, I mean, because you can't do that with a regular bank account at any of your banks per se.
You can, but you got to pay like a fee for all of them. I think at Bank of America, I think it's like $10
Okay, so this you're paying $30 a month. You can do up to 50
for free, included in that. Yeah.
And then after that, there's a higher volume plans. I take it because I could see if you're somebody who needs that many, this is a no-brainer. Like $30 versus I can only send 3 transactions at Bank of America, so it's a little bit of a no-brainer. But what happens if you exceed that, and where that comes in at?
Yeah, that I'm not sure about. Check it out if you're interested. Go to relayfi.com and look at Relay Pro.
So we've talked about these instant pay or daily pay, these apps like Earnin. Well, Gusto has this now. What do they call it? Gusto. It's like an on-demand Gusto cash out, I think they call it.
So the idea is that I work, but my payroll is biweekly, every 2 weeks, but I can get my money sooner through these features.
Yeah. And until like the Industrial Revolution, apparently, so listen to this podcast with the founder of Earnin, people would just get paid at the end of the day. You'd go to work, you get paid at the end of the day, and then the Industrial Revolution came along, and then the power shifted to the business owners. Like, I will pay you in 2 weeks. Tough. And now what's happening is these daily pay solutions have started popping up in the market.
Well, I just want to say it's not just the business owners to be blamed for that. It's taxes.
Taxes as well.
Because calculating payroll taxes every single day
was hard.
Impossible. That's why that ultimately is why we ended up going to weekly, biweekly.
Okay.
Yeah.
But now with computers, it doesn't really matter. It's just super easy to calculate.
We should be able to go back to what we used to do.
And now these services have been around for 2.5 years or so. They're getting pretty commonly adopted. And what's happening now, they're starting to see behavior changes in people's behaviors. So Earnin's seeing that companies that rolled this out, like Walmart has rolled it out, that people are 6% more likely to not miss shifts. They come to work.
Because they have that instant reward.
The instant reward is there. Some of it is also because they have money, they can buy their gas for their car to get there. Maybe they're not worried about bouncing a check. Maybe they can afford to pay a babysitter to get to their shift. So there's benefits of this. And now it's coming full circle where we're in this super competitive economy. You can't hire anybody. This is everybody's trying to pay people. Instead of maybe saying, hey, I'll pay you $17 an hour, how about you could say, hey, I'll pay you $15, but I'm going to pay you every single day. And so now it's a competitive advantage for you to offer this as your employer.
Yeah.
So it's just eye-opening on the history of this a little bit and why there's other benefits coming out of this that I don't think I realized even existed 2 years ago.
I think it makes a lot of sense. It's all about understanding the psychology of your typical hourly worker. And I think as business owners and accountants, where we take a big picture view of our own finances and our businesses to the point where a lot of us say, why would you need to get paid daily? That's just ridiculous. Like, pay me once a month, right? It's easier that way. And it's really the opposite for most workers. They are paycheck to paycheck.
Well, it's the dilemma. Like, being poor is very expensive. And because the way Earnin works, they see your timesheets, but they're also connected to your bank feed. So they've made observations now where people are not paying overdraft fees. They're not getting payday loans. So they're able to get ahead without using these horrible leechy vices that just kept people poor. That's being moved out of the system because people are getting paid every single day.
Now, if only we could figure out how to teach people how to build a buffer in their bank account. Like, that's the real problem here, right? If people had a week or 2 weeks or a month of funds, then they wouldn't need it.
Well, the IRS is sending that out now once a month.
With the child tax credit payments, yep.
This episode of the Cloud Accounting Podcast is sponsored by Odoo. I was checking out Odoo the other day, and sure, it has all the typical features you would expect in a highly customizable cloud ERP system, including dozens of built-in modules and thousands of third-party apps. But one of the built-in app modules really caught my eyes. It's a spreadsheet, but not any spreadsheet. It's a spreadsheet that is built directly into the accounting system. By using Odoo's built-in spreadsheet module, you can model and manipulate your data, and it instantly stays up to date without any exports or integrations. It's crazy powerful. Imagine a sales rep updating a projected sale amount in a CRM module and having instantly reflected in your spreadsheet. The accounting and invoicing modules are always free, so there's no reason not to give Odoo and the spreadsheet module a try today. Head over to cloudaccountingpodcast.promo/Odoo. That is cloudaccountingpodcast.promo/ODOO. Unleash your growth potential with Odoo.
Real estate accounting tech company Proper has raised $9 million in funding, yet another accounting firm with engineers. This one is based out of San Francisco, and this is their Series A, $9 million. They plan to use the extra funds, according to Accounting Today, to accelerate development of their automated accounting technology, build a new customer-facing platform, and hire strategic talent across all functions. This startup is interesting to me because we have seen accounting firms with engineers pop up that serve all businesses. Pilot, for instance, they don't say we only serve X industry. They say we'll do your books. Doesn't matter. You're a small business, we'll do your books. Bench, same thing, right? Small business, we'll do your books. But Proper is laser focused on real estate and specifically property management. And I like that. I like that focus. If you're an accounting firm that doesn't have engineers, like, it's something that you could take a look at and learn from. Because if you're trying to attract clients in X industry and they come to your website and it shows that we are the accounting firm for X industry, like, it's very powerful.
It's a good from a marketing perspective, but from a scale perspective, you start to get a finite, it's never finite, but you kind of get a finite set of apps you have to work with. There's 3 or 4 apps in that industry. You can learn them very, very well. And then that's their bet, is they're going to be able to automate some of these apps. And chances are what they'll really do with this money, I can imagine, they'll buy one of these apps and just control the whole stack. If you want to do automated bookkeeping for somebody, if you own the GL and you own the app they're using to do all their day-to-day, and the only other thing you need to do is own a bank. And now you have the whole stack.
So I wonder what they are using behind the scenes, if they have built their own GL or if they're also layered on top of Xero or QuickBooks. They do have some unique property management and trust accounting features that they describe on their website, but it's not clear to me, how much they've built themselves and how much they are building a tech stack from other off-the-shelf solutions. What else do we know about them? They increased their staff last year from 15 employees to 92. And in the first half of 2021, Proper has already grown to 120 staff. with plans to end the year with approximately 200 team members. That really is rocket ship kind of growth for an accounting services business. So if you want to check them out, it's worth taking a look just to see the marketing, because again, one thing that we can all learn.
What's that website?
The website is proper.ai, proper.ai. It's worth taking a look just because these startups do really good marketing, really clean sites, really simple messaging. If I'm a prospect and I'm looking for somebody to help me manage the books, this speaks to me. The headline, "We manage the books, you manage the property." Fortune 500 level financial specialists helping property managers and owners stress less and earn more, with a button that says "Talk to us" right there on the homepage. So on the homepage too, it looks like they have Yardi and AppFolio, Propertyware, and QuickBooks listed. It says from Yardi to AppFolio, Propertyware, and QuickBooks, we have you covered. So that makes me think they're layering on top.
Yeah, so what they're probably doing here is you have QuickBooks, you have those other software packages. Those apps probably have never integrated with QuickBooks properly. They probably have a bunch of reports. What they're probably doing is they're taking those reports from these products and they're running them through their own tech stack of some type to create API calls into QuickBooks. At some level, it's kind of simple, right? Basically, you're just doing the data entry you would be doing. They're already doing in-house. But that's the way you do this, because these apps usually aren't going to build the integration because they just lack the expertise.
Yeah, I wonder if they're using onshore or offshore accounting. Are they outsourcing it abroad? It's not clear.
Is there any tech? That's always the question. Is there tech? Is it just data entry happening somewhere else? Yes.
But even if it's just, offshore resources, if they're like this laser focused on a single niche, then I think it's possible to build a very, very profitable business because of the focus. You can actually deliver useful information because every single client you have is the same. They're all property managers, and so you know exactly what numbers they need to see and how their chart of accounts needs to look. When you're a service like a solution like Bench or Pilot, I worry because every business is very different, and so how can they create a reporting that is useful when all the businesses are different? It seems very difficult to do.
Yeah, and it looks like it's super narrowly focused to just the bookkeeping of an individual property, because they want to do that first before they'll try to do your corporate books, and they don't provide tax services. It's we'll hand it back to your CPA, but it's really about we can help you manage a property.
Well, and this is the real challenge of property management is that, David, let's say you're a property manager and you have 20 different buildings that you manage, homes. Condos, could be apartment buildings with multiple units. You have to do the books for every single one of those properties every month. So you're basically, a big chunk of your job is bookkeeping, getting the rent checks, depositing the checks, producing the reconciliations, paying out the owners, taking your fee. A lot of it is accounting.
Just bookkeeping.
And then, of course, fixing stuff when it breaks.
Yes.
Moving on. Remote has raised $150 million on a $1 billion plus valuation to manage payroll and more for organizations' global workforces. That is the headline in TechCrunch. Remote. I had not heard of this. There's all these startups popping up or that have been around that I just have not been aware of, and then they go out and raise a bunch of money.
I think the other one was called Deal, right?
Deal, yeah. So this is global payroll. These are tools to manage onboarding, payroll, benefits, and other services for tech and knowledge workers located in remote countries, whether they're contractors or full-time employees. So they raised $150 million. It's a Series B. They own all of their own infrastructure. They provide HR. They have fully operational legal entities in 50 countries. They're going to grow to 80 by the end of the year. And this is powering, companies going global. And Rippling was one of its first customers. So this is what Rippling is using.
And I knew you liked that last website we went to, but if you go to Remote's website, it's remote.com, they have the other thing that helps people sell is fear.
Uh-huh.
And so they have this little ticker and a scroller that says avoid compliance fines in Canada. And it shows avoid compliance fine in California and the United States. And it talks about how it's $20,130 per violation. It's unfortunately it's going too fast for me to read, but there's a Oh my gosh, every time I go read it, it changes. But yes, these fines just keep scrolling through each country, what your fines are if you don't stay compliant.
Yeah.
Payroll.
Well, because a lot of people think, if I'm just based in the U.S., for instance, and I pay people in other countries, I can just pay them as contractors. But that is not always going to work out.
I do like their country explorer, like all the countries that they support. Instead of just being a boring spreadsheet list of countries with a link, it looks like you're browsing for a vacation on Airbnb. And it shows which ones are available. It has a little available ticker. It's kind of funny.
We got lots of updates. We've got updates from Xero and QuickBooks. I'll start with Xero this week. Xero has introduced an AI-powered analytics tool. Yes, AI. And there seems to be actual AI in this tool. If you are a Xero user, you may have seen this rolling out. They have basically gradually been rolling this out. It's been called the Business Performance Dashboard, the short-term cash flow projection, and now that it has been officially released as Xero Analytics, or Analytics Plus, I suppose is what it's called. And the thing that I like most about this is this short-term cash flow projection. Previously, it only included invoices and bills that were entered into the system. But that is of limited use because there's a lot of things that happen in a bank account that aren't invoices or bills. And so Xero has addressed that by applying an algorithm to your bank feed that then recommends recurring transactions to be added into the short-term cash flow forecast. So if your rent just gets auto-debited every month, Xero will see that and then suggests that you enter that into your cash flow projection as a monthly expense. And then that going forward is now in your projection.
Yeah, it seems like QuickBooks and Xero are both on a similar train pace here of adding this set of functionalities. Like soon, everybody's going to have probably just good enough cash flow forecasting in their accounting system
and this
for free. Just like
yeah.
it's just going to, and it's going to work. Like in theory, you won't have to do too much work.
Yeah, and this was like the number one reason why I, as a business owner, would reconcile my books every day. I would get every transaction in there, and I would then put in the ones that I knew were coming up over the next few weeks as like future transactions. And then I would look at my balance at the end of that period, and that is how I knew whether or not I had enough cash. This gets rid of that task for me. So as long as I'm going in and recording transactions to get to my current bank balance, I no longer have to like do the manual 30-day projection that I was doing, if that makes sense.
And Quicken, back in the day for personal finances, had this. It was like a calendar. You drag and drop the transactions.
It was brilliant.
It was way ahead of its time, but it would be. It seems less important for personal finances and way more important for a business to be able to do that.
So I think this could be like a great tool for accountants to look at and consider using on behalf of your clients, and then keep that up to date maybe you do it every week for them. You might even do it every day, and send them that snapshot. So say like as part of our service, we're going to update your short-term cash flow forecast. You do it in Xero. They don't have to worry about how you do it. You just do it for them when you do their books, and then you screenshot it for them and email that to them, or text it to them, or however you communicate with your clients. And so that's the evidence of you doing that short-term cash flow forecast, and you can point out if they're going to have a problem.
So QuickBooks has always had their merchant card acceptance. I don't even know what it's called right now. It's always been called some different names.
It was Intuit Merchant Services. I think it was
GoPay at one time.
GoPay.
So there's lots of things. But they have a little dongle. So just like Square has their Square, and then it became that floating piece you could tap a card on or insert the chip in. Well, they have their own chip-based reader. And it's what really caught my eye about this. I probably wouldn't even brought this up on the show, but the chip reader looks really, really cool and slick and modern. And you'd actually impress your client if you pulled it out and showed it to them.
It's like this. It's round.
Like a small hockey puck.
So they deliberately went away from the square.
Okay.
Right. They went
more circle.
They went for round. You can dip the card in there. You can tap it. But what's really cool is that you can. It shows the amount that you're going to charge them, like in an LED display on the top of it.
Yeah, like a super thin, light up LED e-ink type scenario.
It looks really nice.
It's going to sell for $49, and they're also introducing a stand for $39. This Intuit's taking a play from Apple's.
Oh yeah.
Here's the reader. You want to put it on a stand with power. That'll come out late summer. So we'll see it late summer, and that'll work for both. The stand will actually charge a phone and a reader or a tablet, and you'll be able to put prices of the items into QuickBooks software on their mobile devices, and the total appear in the reader for customer to see. So I think it's a lot of the existing stuff. It's just being kind of a little bit of a rebrand and just a refresh. And it's just the reader looks really slick. I mean,
it does
like
look
I said,
nice.
that's what caught my attention on this was the actual reader itself. Yep. Well done, well designed. Hopefully that's not a architectural rendition of something that doesn't exist. But that's the best description of it. If you're trying to imagine this, imagine if somebody drew this preconceived artist rendition of a future product to accept credit card charges. That's what this is, and it looks like they really made it.
It looks beautiful. Well, hey, speaking of payments, Apple is working on upgrading Apple Pay to include buy now, pay later. We've been talking about a bunch of services that have cropped up.
They're some of the biggest fintech companies in the world.
Right, because everybody's living paycheck to paycheck, apparently, and they all want to buy now and pay over 4 installments or 8 installments or whatever, right? Well, this hasn't been possible with Apple. They are partnering with Goldman Sachs, which I think also did the credit card, the Apple Card, to offer a buy now, pay later product that is integrated with Apple Pay. It will be called, well, it's known internally, I don't know if they're going to call it this, it's known internally as Apple Pay Later, and will allow consumers to pay for any Apple Pay purchase in installments. So this could be a good reason for a lot of merchants to start accepting Apple Pay, because if you've got big ticket items and you don't want to deal with setting up a buy now, pay later system yourself, if you take Apple Pay, now your customers can do it. And Goldman Sachs will deal with the financing. You don't have to worry about it. And you as the merchant get paid right away.
And that's what's interesting about this. The merchant, I think, gets their full pay.
Yeah, immediately.
But somewhere around here, I'm not sure who pays the fees. The customer agrees to pay a little extra fee. Is that how this works? It's almost like a payday loan in a weird way.
So the way it works is, with Apple Pay anyway, is that the customer will pay 4 interest-free payments every 2 weeks or across several months with interest. So the plan with 4 payments is called Apple Pay 4 internally, while the longer-term payment plans are dubbed Apple Pay monthly installments. So that's interesting. If you pay in the 4 every 2 week payments, so that's over 2 months, it's free. But if you want to pay longer, then you pay interest.
So it's that similar thing we've talked about, like with your credit card. You get a bunch of points and you pay your credit card bill on time every single month. But there's millions of people that don't do it. And maybe it sounds like that. There's going to be millions of people that choose the monthly installment and pay some fees. And that's going to subsidize the cost of this for people that just do the 4 week, every other week, or whatever the payment schedule is for the Apple 4.
Yeah, at the every 2 weeks is free. Interesting.
And this tells me Apple's probably going to now be able to charge twice as much for the next iPhones because they're going to trick people into paying it over 4 weeks instead of...
Well, that's what they've already done by bundling it with the cell phone plans. You don't even know
how much you're paying
for your phone. I look at my bill and I'm like, oh my God, I'm paying $35 a month forever for my iPhone.
That's how they can buy now, pay later, and later, and later, and later, and later.
Yeah, well, they've just turned the iPhone into a subscription, right? Which is kind of where everything's headed, and then it's just get a new one every 2 years. It's kind of brilliant.
So we talked to just quickly about how some of these buy now, pay later companies like Affirm, and they're some of the biggest fintech companies in the world. Yeah. Well, now there's a new one of the biggest in the world, Revolut. So we've talked about Revolut on the podcast plenty of times. Mm-hmm. Revolut just took $800 million at an approximate, is it $35 billion valuation? Is it okay to be off $2 billion at this point?
I mean, it's just a valuation, right? So it doesn't mean much, but yeah, $33 billion, $800 million in new funding. And these guys are another neobank, right? Bank on your phone.
And what's interesting about this is they took a lot of this money came in from both SoftBank and Tiger Global. So usually those two are competing for these massive rounds of investments into companies, and they did both in the same one. And I did see an article that compares them to the Lloyd's of London. Their value is way more than Lloyd's of London, and they're teeny in comparison. Lloyd's of London, they're 19% of the entire mortgage market in the UK. They're 25% of all credit card balances, 22% of current accounts, 19% of all small business lending, and 16% of consumer loans. So Lloyd's almost owns the market, and Revolut's worth more than them. And it's fair to question these things, but again, we've always talked about this. The VCs, the investors, everybody's betting on the victory 10 years from now. It's the moonshot, right?
Yep. Well, and if Revolut ends up being the new Chase Bank, then it'll pay off. And that's what everyone is looking to do, is get everyone off of B of A and Chase and Wells Fargo and Citi, the 4 big ones. I think at least one of these neobanks will do it. Well, David, that's all the news that I've got at the intersection of accounting and technology this week. How about you?
Nothing else. We do have a bonus episode of this episode, though.
Yes. Do listen to our bonus episode, an interview with Ben Robinson.
Ben Richmond.
Ben Richmond.
There's a Ben Robinson in our space, so it's forgivable.
Okay. Oh, he's the
Bookkeepers.com guy.
And that's why I'm thinking of him, because we were talking about it. Ben Richmond, head of Xero in the United States. He is also here at Accounting Salon, and
there's a little carrot in there, a little diamond.
Make sure you listen to the end. If you are a fan of Xero and XeroCon, you'll be very excited to hear what Ben has to say on that bonus episode. I think now, David, it's time to go out and explore New Orleans.
I think it stopped raining, so let's go out in the humidity and see what it's like.
I'll talk to you next week.
Bye, everybody.
Bye.
Time for the classifieds. If you're looking to fast-track a scalable 7-figure accounting firm without having to work 1 million hours a week, check out Ryan Lazanis' online coaching membership, Future Firm Accelerate. The Future Firm Accelerate program is designed around Ryan's experience of taking his own cloud firm from scratch to sale, so that you don't have to reinvent the wheel. You'll get online learning and topics that help you automate and systemize all aspects of your firm, coaching when you need help with implementation, and you'll also join a collaborative community of hundreds of other forward-thinking accounting firm owners. For more details, head over to www.futurefirmaccelerate.com. That is futurefirmaccelerate.com. Are you an accountant or bookkeeper who wants to get the most out of Xero? Xero, a comprehensive guide for accountants and bookkeepers, is available now. Author Amanda Aguilard shares 8 years of experience using Xero in her own practice to connect the dots between accounting theory and software. See why Xero founder Rod Drury calls her a proven expert in getting the most out of the Xero platform and ecosystem. Buy it now on Amazon or through your local bookseller. I quickly wanted to let you know about a new project that I've been working on for the last year or so. I'm launching a podcast network called Accounting Podcast Network. It has new podcasts that I know you'll love, like the Accounting Salon Conversations podcast hosted by Amanda Aguilard, and the Accounting Automation Workflows podcast co-hosted by Brian Clare and Heather Satterley. Head over to accountingpodcastnetwork.com. That's accountingpodcastnetwork.com. Want to get the word out about your newsletter, webinar, party, Facebook group, podcast, ebook, job posting, or that fancy Excel macro you just created? Why not let the listeners of the Cloud Accounting Podcast know by running a classified ad? Hit the show notes for the link to get more info.